Hey everybody, what's going on? It is James here with a new update video for you today. Had some time to recharge my batteries, did some trading, made some money, so that always helps to put the juice back in the pack. So wanted to shoot a video talking more about the market and talking more about the bigger picture stuff. Also some of the altcoins. A lot of people are interested in altcoins and wondering what the hell are going on with altcoins. So let's start off by looking at the big picture on Bitcoin. So we'll start in the midterm. This is a 4-hour chart, okay? Up until an hour ago, we had the ridiculous bullish sentiment everywhere you could look. People are bullish. Once again, I shorted this move, and once again, I closed the trade down here at 11.7, down near the bottom of this candle. It's not rocket science, folks. When the stuff is overbought and when the volume isn't there, and when people are talking about all-time highs and Lamborghinis and getting rich, and when people are posting on Twitter about how the only 3 certainties in life are death, taxes, and 30% pullbacks being good buying point on Bitcoin, it's time to start looking for shorts. So we have dropped down. This looks to be a bear flag. However, it's on a 5-minute chart, so that doesn't hold a ton of weight. It's not something that I would just jump into a trade just because of the pattern, not on a smaller time frame like this. But if it plays out, then that would have a potential flag target down around 11,200, which is actually our low from yesterday, right? That's where we bounced yesterday before we went up. Now, you might be noticing the squiggly line here, so let me zoom out so you can see what that's all about. We'll fix this. Actually, let me just use a chart that's already scaled properly for this. So let's go over to Kraken. If you look, no, this BitMEX, doesn't matter. They're all about the same. This was a high, this was a low, and we just pegged a lower high. That is a signal of a trend reversal. This was a 4-hour trend that we had really been in ever since July 28th. We had been in this strong uptrend. Even when we dumped yesterday, this was not a sign that the trend was over because we bounced. This was still technically a higher low, so this was still a valid uptrend. However, this is a problem. This has now pegged a lower high, and if you look, we are getting a textbook double top pattern. All right, so what I'll be watching for right now is what happens if we get down to this level right here, which is that 11.2 level. Again, on a 5-minute chart, that is our potential flag target. Not good if you're a bull. All right, if you're a bear, it's pretty awesome. So that is what's going on the 4-hour timeline. That's what I'm watching for. If we get down here, this is a strong area of support. That's why the green box is there. And it's very possible that we just go down and fill this in, and we do, have another trend reversal where we start going back up again. I'm not watching for that. I'm not expecting that. I am fully expecting this thing to retrace. This is just quick, no magnet. I'm expecting it to retrace at the very least to $10,300 range. Okay, and from there it's going to be very difficult to say. Now, again, it could do anything. It could completely go against me here. But if it does get to 10.3, it's going to be a nail-biting experience because I don't know what it's going to do from there. I don't know what it's going to do anytime, but I don't even have any confidence in what it's going to do at this point. It could do any number of things when it gets down there. When I'm looking at a larger time frame, when I'm looking at, for example, a daily time frame or a weekly time frame, this is what I'm looking at. This is a CME chart. This is the futures chart. I talked about these gaps in the last video. There's a gap down here around 8,500. There's also a gap now that exists between 10.8, that area, and 11,000. So we could just fill that in and go up. But this is what I see happening as a bear. I see this as being nothing but a descending triangle. It is the same descending triangle that we've really been in ever since we made our top back on June 26th. We went up, we tested the top. We came down, we tested support. We went up, we tested the top, right? And really this thing, top, down, top, right? 2 touches down. This was our second touch. This was our third touch of the support, and then we had our third touch of the top. There's a lot of time left in this daily candle. This could absolutely go up and it could close above that level. It is completely possible. You can't count your chickens before they hatch. But assuming this daily candle closes and puts in a lower low here, a lower high here, I think that we are going to head down and possibly fill this gap, right? 10.8 is this gap. We need to go down to at least 10.8. Go down to 10.3. That would be in this area right here, okay? Right in this ballpark right here. And then from there, maybe we bounce and bust out of this triangle. That's possible. Or if we break through 10.3, I think it's extremely likely that we will go down and retest support down at 9,200. And again, at that point, it will be a case of having to analyze what the market looks like, what sentiment looks like, what all these different factors look like, because it's possible that we could just go ahead and break through there, maybe go down to 8,500, bounce, and that's the end of the correction. Or it's possible we could go down even further than that, right, to the 61.8 fib like I talk about in so many videos. I also think it's completely possible that we consolidate even more and that we bounce off of this line. We go up again, test the top of this triangle up around 10.8, and then finally dump from there down to either fill this gap or go a little bit lower to the 61.8 fib. Both of those are possible. Now, I saw some people on Twitter talking about they would be concerned if we went that low because we would be underneath the 21 weekly moving average. All right, so this video might have a weird type of break in it because I actually had to pause it right when I was shooting the video. Bitcoin started to dump, and I was talking about this bear flag just a minute ago. I didn't get quite down to the 11,200 I was talking about. So far it stopped at 11.4, and this candle looks pretty bullish. This looks like bears got exhausted and they've pushed it back up. This is 11,400 down here. It's all the way back up to 11,560. So it'll be interesting to see what happens over the next few minutes. It doesn't meet my setup that I trade off of. Doesn't meet any of my criteria for a trade, so I'm just sitting on the sidelines. But back to what I was saying is some of the people on Twitter were saying they would be nervous about buying Bitcoin if it fell that low underneath the 21 weekly moving average. And the reality is that there's no reason to be concerned about that. Because if you go back, what they were saying is that's the sign of a bear market, because they're basing it off of this here. Well, that's ridiculous. That is ridiculous to say such a thing. If you go back and look historically, we have dipped underneath the 21 weekly moving average multiple times in Bitcoin's history. All right. If you look right here, this was not a bear market. This was the bear market ended over here, and this was the recovery, and we dipped underneath it right here. We came up, dipped underneath it in April 2016, and again in April 2016, and again in April 2016. I don't think anybody would say that 2016 was a bear market. We dipped under it in August of 2016. Again, nobody's going to say that August of 2016 was a bear market. When it dips underneath it, just look at this, over and over and over, it dipped under it. It dips underneath it during corrections. Not every correction dips underneath it, but if you have a large parabolic move, like this one right here in June of 2016, you often get a deeper correction, and that correction pokes its head through the 21 weekly moving average. And as you can see, it's always on tails. Now, if we close underneath the 21 weekly moving average, I would be a little bit nervous that we were going much lower, possibly down to those $2,000 targets I talked about in previous videos. But if we just, slide down through it on a tail and then close above it, that to me would be an extremely bullish scenario. That would mean, hey, look, the bears got exhausted, and this is basically a hammer candle, and on a weekly, I'm going to take that as a bullish signal, and I'm going to be a buyer of Bitcoin for sure, right? But we can look, even right here, this was March of 2017. Good God, nobody on earth is going to call 2017 a bear market, right? You would have to be completely out of your mind to even mention the word bear market and compare it to the 2017 Bitcoin run-up. But yet here we are in March of 2017 sliding underneath the 21 weekly moving average. At that time it was 921. Price fell all the way down to 891. Now you might say, James, that's not very far. No, it's not very far at all. It's probably about 3% if I had to guess. So about 6% underneath it. So let's compare that to today's price action. If we fell underneath the moving average, which is currently sitting at $8,085, if we fell 6% underneath it, that would put us at $7,500 right there. If anybody tells me that they're terrified to buy Bitcoin because we fall down to $7,500 on a correction after a parabolic move like this, I don't know what to tell them, right? I just don't. But this is obviously still putting in what looks to be a double top, okay? So I can't guarantee what's going to happen. Just like every other trader out there, I'm looking at these charts every single day and I'm trying to decide what might be coming. And I do the very best I can to make decisions on that. I shorted Bitcoin again today, right? I mean, that's just what I do. I shorted it. I was actually looking for a spot to go long on this drop. But when this drop did this and then pops back up like that, it actually ruined my setup. And I know that may sound a little bit crazy because this is indeed a bullish candle, but I don't trade candlestick patterns. I watch them. I try to get an idea of what might be coming. For example, this bear flag I was talking about a few minutes ago, I watch that, but I don't enter a trade off of it. I won't say, okay, this looks like a bear flag, I'm going to go short. However, if I was thinking about going long here, I would say this looks like a bear flag, I think I'll sit and wait. Okay, so that's how I use candlestick patterns. But I have a very proprietary setup that I use, and it got ruined by this candle. So now I'm just sitting out. Okay, but that's where we're at right now on Bitcoin. Let's talk about alts. We don't ever talk about alts in my videos. Okay, so here's the alt picture, and this is one reason that I don't think Bitcoin is near as healthy as what people think it is. Okay, basically what I've done is I've drawn my Fibonacci levels. Let me get rid of the extensions because they just look messy. There. Drawn the Fibonacci levels from the top of the bull market down to the bottom of the bear market, and this is what we have. This purple line is our trend line. This trend line goes all the way back to August of 2015. Boy, look at Bitcoin. It's ripping up. It does go all the way back to 2015. I think it's a valid trend line for our total market cap. But when we look at this and what's actually happened, we have bounced off of this line. And all we've really done is come up and test the 38.2 fib, which is, we should have busted right through that thing, technically speaking. Instead, we put in a wick above it, and then we collapsed. And if you look at where we found support on the 23.6 Fibonacci level. Now, if you know anything about charts, if you look at charts on a regular basis, you're going to recognize this pattern as being a very common pattern that plays out with altcoins. So you'll often get, after a big dump in an altcoin, you'll have a big pump, right? Test of 38.2 fib. You'll have a drop down to the 23.6. You'll have another bounce. Sometimes you'll get a bounce all the way up to the 38. Sometimes it won't quite make it. You'll put in a double top, and then you'll dump back down to the trend line. Now, if we turn on a log chart, that trend line is actually down right around $230 billion. Somewhere between 220 and 240 billion is where I would expect it to hit if it does collapse. Right now, our market cap is sitting right around $297 billion. All right. So what that means is we're going to be bleeding out somewhere in the neighborhood of about $50 billion worth of market cap. A lot of that should come from Bitcoin if this plays out, but it's very possible that the alts are actually going to die, and that's not good. I still hold a lot of alts, so just be mindful of where we're at in this market cap scenario. Now, the other thing that I want to bring to your attention right now, because I don't think anybody is talking about this, I haven't seen one person talk about this. They keep looking at the Bitcoin chart, and they are very bullish on the Bitcoin chart. But the reality is, I don't have a clean Bitcoin chart. I don't know where it went. Okay, well, let's just look at this one. So Bitcoin has been pumping, but while Bitcoin has been pumping, that is not new money entering the market. People have gotten this weird idea in their head that this is new money, that people are excited about crypto again, and that crypto is going up, and that this is people, buying crypto and FOMOing in and all this kind of stuff. And the reality is, this is not new money driving this market. What this is old money moving away from altcoins and into Bitcoin. It's the same crypto people that have been here for the last 2 years, right? Or longer in some cases. What this is it's not a fleet, the same thing. You're seeing stories in the news about, oh, this is the, Chinese currency is being devalued. This is the Chinese people. They're moving their money into Bitcoin as a safe haven. I'm calling bullshit on that theory. That is not happening. People do not move their money into Bitcoin as a safe haven. It's not a stable asset. It should be someday, but it's not yet. It is a volatile asset. And the average person cannot afford to put their entire life savings into Bitcoin and risk it going down 5 or 10% or 20% or 50%, etc. That's not happening. What's happening is money is flowing from altcoins into Bitcoin. And you don't have to look hard to see this. All the altcoins are dying. And also, if you remember, if you were around for the last market cycle, when Bitcoin pumped, what we saw in 2017, altcoins pumped with it. If Bitcoin went up, altcoins went up with it. Now, they didn't always go up quite as much. Sometimes they went up further. Sometimes they went up a little less. But that's not happening in this market. If I look at my portfolio right now, I'm not going to pull it up in this window, but if I look at it in the other window here, if I look at it in the other window right now, and remember, I have no Bitcoin right now at all, yet my portfolio is down 2.87%. That means that while Bitcoin was face ripping today, my portfolio actually went down. Okay? That's because money is flowing away from altcoins and into Bitcoin, and that, my friends, is what is driving the massive Bitcoin price increase. It's also why when you look at the total market cap, we haven't even busted this 38.2 fib. Yes, Bitcoin has went up and tested the 61.8 fib, while altcoins have completely faltered and fallen apart, and that's where we're at. So I'm certainly not going to dump my alts. Those alts I have, they're long-term capital gains, they're long-term investments, and yes, they are still capital gains. They're not losses right now. Most of them are still up quite a bit from where I bought them. I was lucky to get in at the ground floor on a lot of those alts. But I'm not going to dump them and chase Bitcoin. I'm just not going to do it. I think Bitcoin is overbought. I think it's currently overvalued, and I'm going to wait and see what happens with my alts. Now, I could be dead wrong on that. I think alts are probably going to take more of a beating. I'm probably going to lose even more money. Those altcoins, I don't mind sharing with you. Those altcoins right now are down over 50% from June. Like my altcoins from June until now are down about 55%. So, that's a little bit crazy when you think about it, because Bitcoin is not down anywhere near that. And again, it just supports the same theory. If you look at Bitcoin, where is Bitcoin right now? Well, Bitcoin from its June high is down about 16%, yet alts are down 40 and 50% across the board, right? Money is flowing to Bitcoin. It's flowing from alts. It's not new money entering the market. That's also why if you look at the volume is shit, right? Volume has been terrible all the way back from May. It's just going down, down, down. So again, I'm a bear. If people don't like that, I'm sorry. I know that people want bullish news, but listen, I deal in reality. I don't deal in false dreams. I don't deal in leading people off a cliff. It's very easy to see that we're putting in lower lows on these charts. It's very easy to see that we're inside of a giant descending triangle. Until we break out of this triangle and close above it on a daily chart, I'm a bear. Now, if we pump up today and we close up here, by golly, I would call that support, and I'd be looking for a long position. All right, so I hope you guys enjoyed this video. It's a little bit different take. It's kind of taking a look at the total market cap. It's taking a look at the altcoin market, and it's giving you a valid reason why Bitcoin is going up and alts are going down. Please remember, I am literally some guy sitting in a spare bedroom. I am not a professional financial advisor. Nothing in this video is financial advice. You should always do your own due diligence and seek out professional investment advice before investing in cryptocurrency. This is James. I hope you enjoyed the video. If so, please give it a thumbs up and subscribe to the channel. Don't forget to check the description for links to my Twitter, my TradingView, and also my Facebook group.